Welcome to the Highfield Professional Solutions IR35 and the Private Sector Update. As most of you will be aware, with the recent draft finance bill published on the 11th of July 2019, I'm here to give you all some updates. HMRC IR35 legislation was introduced back in 2000, designed to reduce tax avoidance by contractors who HMRC believed to be disguised employees. Under these original rules, there was an onus on the personal service company, the PSC, to self-assess. However, due to the number of PSCs, it has been hard for HMRC to enforce compliance effectively. So on the 6th of April 2017, the responsibility for assessing engagements with PSCs working in the public sector had shifted to the public sector end user. A consultation in relation to IR35 in the private sector was then issued in May 2018, and then the autumn budget 2018 confirmed that the public sector rules will be extended to the private sector. However, there will be an exemption for small businesses as defined by the Companies Act 2006. To qualify as small, a company must meet two of the following qualifying conditions. Number 1, annual turnover not more than 10.2 million. Number 2, balance sheet total not more than 5.1 million. And number 3, number of employees not more than 50. So on the 5th of March 2019, HMRC issued a policy paper and consultation document, and then the draft finance bill was published on 11th of July 2019, which confirmed the 6th of April 2020 start date. The Treasury expects this measure to net 1.3 billion by 2023-24. So what does this mean? So from the 6th of April 2020, the new off-payroll working rules will need to be applied when a worker is personally providing services to private sector end users through their PSC. So this will continue for public sector end users, and now also medium and large-sized private sector end users. So the end user will need to assess whether the worker would be deemed to be an employee, and this will also apply even when other parties sit between the end user and the worker's PSC and the supply chain. So for this, HMRC developed the CESS tool. This is to help assess the employment status of the worker. However, MPs have voiced concerns about the accuracy of the status check tool. But we do know that HMRC are currently looking to enhance this CESS tool to make sure it works effectively for organisations. And this will be rolled out before April 2020 next year. Once the assessment has been done, if the end user determines that the worker would be deemed an employee, then the fee payer will need to account for tax and NIC under PAYE when paying the worker's PSC. The end user will have to provide the determination statement to both the worker and agency. So let's take a look at how the information should flow through the supply chain. So number 1, the client is required to provide status determination together with a reason for determination to the party they contract with and the worker. Number 2, status determination and reason for determination are required to be passed down the contractual chain. And finally, the client is required to provide the status determination and reasons for determination to the worker. The end client will have a duty of reasonable care when making an IR35 status determination and must share their determination and reasons with the supply chain in a status determination statement. This in effect is the client's view of the IR35 position and the client's reason for that view. There will be a statutory client-led status disagreement process where end clients have 45 days in which to respond to contractors or agencies concerned or questioning their status determination. Non-compliance is an area which is still to be fully clarified by HMRC at the time of this video recording. However, the current proposal is that if the PSC or any other party in the labour supply chain fails to account for PAYE and NIC, the liability will pass to the client as end user. We can then see here the transfer of liability across the labour supply chain. The status determination flows down the contractual chain. In this example, if Agency 3 fails to share the status determination with the fee payer, then the liability initially sits with Agency 3. If HMRC fail to collect the liability from Agency 3, then the liability transfers directly back to Agency 1. And finally, if HMRC fail to collect the liability from Agency 1, the liability finally transfers to the client. So Highfield have come up with the 4 C's of IR35 for our clients. So the 4 C's: costs, control, compliance, and communication. Costs. So, we advise to determine what the cost of IR35 could be to your business. This is due to the additional resources, etc. that you may need. Control. Do you have the relevant controls in place? You'll need a step-by-step process in place to help your business become IR35 compliant. Compliance. Are your employees trained and knowledgeable of IR35? And do you have a compliance team in place to deal with this new legislation and determining status decisions? And finally, communication. You'll need to ensure you are communicating the status decisions to both the workers and agencies from 6th of April 2020. At Highfield Professional Solutions, we have a dedicated financial compliance team in place in which we ensure that all workers are fully compliant before they engage work with our clients. In preparation for the forthcoming change in legislation, our directors and our financial compliance team have been attending a number of IR35 workshops and events over the past few years. We are fully knowledgeable on the latest IR35 updates and legislation, and also what is to be expected of us at this time. We are also in regular contact with the REC to be as proactive as we can, and we want to ensure that we are able to fully support our clients and their workforce needs most effectively. So with IR35, there are obviously risks to your business, which could be operational, legal, and/or reputational risks. But if you act now and are fully prepared in time for the 6th of April 2020, then you can turn this into a positive, and will also be attracting off-payroll workers if you're fully prepared for these changes. The draft legislation is subject to an 8-week technical consultation until the 5th of September 2019. The outcome of this process may result in amendments to the draft legislation, and the final legislation is expected around November 2019, so we will give further updates around this time. I hope you found this video useful, and if you have any questions, then feel free to contact us with your queries and we'll get back to you.